right, ladies and gentlemen, hello and welcome here to us at Nadex. My name is Philip and I will be once again your presenter for today's webinar. If you have a look at your webinar interface, you can see that little questions box, and please, by any means, or by all means, if you have any questions through the course of this webinar, let me know those questions and I'll do my very best to answer these as we move through the webinar. Right now, I would appreciate a very short yes or why in that box to just let me know that both the audio and the screencast are working properly. Wanted to be absolutely sure about the screencast, so I already flipped the first screen and I'm doing the second one. All right, perfect. Don't want to screw up again. All right, guys, so today's session is scheduled to run for about half an hour. And of course, before we get started, there are our lovely and usual risk disclaimers that you already can see on your screens right now. I need to make you aware of those, so please take a moment of your time to read through them carefully and make sure that you're okay with them. And really, thank you very much for the feedback and appreciate it really to just see and hear that audio and video are doing fine. So this risk warning says essentially that trading, of course, involves risk and that you should understand those risks and the risk associated with the instruments you're using before you are getting active in the market. As neither Trade with Position nor myself are investment advisors, nothing that we say should therefore be considered to be actual investment advice. All examples are shown for educational purpose, so please make sure you're okay with this before continuing with the webinar. And of course, here's also the risk warning, this time coming from Nadex itself. Trading on Nadex involves financial risk and may not be appropriate for all investors. The information presented here is for information and educational purposes only and should not be considered an offer or solicitation to buy or sell any financial instrument on Nadex or elsewhere. Any trading decisions that you make are solely your responsibility. Past performance is not indicative of future results. Nadex instruments include forex, stock indexes, commodity futures, and economic events. Nadex binary options and spreads can be volatile, and investors risk losing their investment on any given transaction. However, the limited risk nature of Nadex contracts ensures investors cannot lose more than the cost to enter the transaction. Nadex is subject to US regulatory oversight by the CFTC. So, that being said, let's just get started. Let's have a look at today's agenda. The agenda, the same as always, building your own trading strategy using technical analysis. We want to have a plan. I want to have a strategy. I want to have a plan, what I'm looking for when I'm looking at my charts. And only then do I think that if I am able to identify a setup, a high probability setup, which I've backtested, which I know by heart, only then will I personally take a trade in the markets. And the idea is that I want to have a set of comparable trades. I will never know if the next trade will be a winning trade or not. And for that reason, I must make sure my trades will be comparable. And only if I execute my proven strategy flawlessly in the market, only then can this law of big numbers, can the built-in edge of my trading strategy actually manifest itself and start to play out for me and give me hopefully more potentially profitable trades than losing trades. Remember, the edge when it comes to trading is you want to win more often than you lose. You will never be able to avoid having losing trades, but you want to win more often than you lose. And those profitable trades should be bigger than the money than those trades where you have lost money. And those two components coming together, this is what gives you an edge in the market and which turns you into a professional and profitable trader. All right, so let's have a look at the markets and see how those markets and what those markets are doing right now. And I think that one of the most interesting markets right now, or market group, are the currency markets. And let's just get rid of those FIB retracements that I've drawn here for a moment and just checking that you guys can see my screen, but I think that's looking fine. All right, we're looking here at the euro, we're looking at the US dollar, and we're looking at the British pound. And let's just get started here with the euro against the US dollar. And we're looking here at a daily chart, and the idea here is obviously this has been a very nice uptrend for quite some time. How do I know it's an uptrend? Well, we're looking at just at the highs and lows, what the market price has been doing. And sure enough, we see a series of rising higher highs and higher lows. And it's quite easy now to just focus on those higher highs and higher lows and say this market is an uptrend. But we have to be precise. We have to be able to have a look at what has been going on just recently here. And if we start to have a closer look, we can start to see that this high here, market pulled back, gave us a little bit too large bullish candle, forming here in our moving average buy zone. And this could have been a potential entry signal. For my personal taste, the size of the candle would have been a little bit too large, and then price continued higher. But please note, we can see now here that price was not able to retest the old high, and it was not able to make a new higher high. Instead, price formed a new lower high. And once price, and let me grab a line to illustrate this level here, that's my key assumption here was after this pullback that this candle here was the new higher low, and for that reason, in an uptrend, we expected to see the next new higher high. But at the moment in time when price actually made a new lower low compared to that one here, I think the trend has already changed at that point. Because what we're seeing here is now that price made a new lower high, and we now also made a new lower low. And once we compare what price has been doing here again just recently, and let me make that a little bit larger as well, you can see that with this high here, actually it has been another lower high too. So instead of focusing on this beautiful run here to the upside, instead we can see that the trend has changed. The trend is already down here on the daily chart for euro against the US dollar. Is this a tradable setup here right now? No, it isn't, because obviously I want to have multiple reasons to take a trade, and what I'm seeing here is really just the trend has changed. That's the most basic assumption, and for that reason I won't consider any long position here in that market, because I want to be trading with the trend. If the trend is no longer there, my foundation is gone. I have no longer the proper context, the proper environment to execute my trend following strategy, and for that reason, euro US dollar, at least on the daily chart, I assume the weekly chart might be looking better for a bullish case, but here on the daily chart, I can see that we have shifted now to a downtrend. And you can also note that the moving averages here, the 10-period moving average has started to close down. It has crossed already below the 20-period moving average, and I definitely no longer have this kind of trending environment that I'm looking for here. So we have to focus and to be really precise on what's happening here on the right side of the chart. Don't get looking for the right word. Don't become confused or it's not like a lullaby. You want to pay attention to what the market has been doing here. Yes, obviously it's a big move to the upside, but just recently we see weakness. We see that price is pushing lower, and sure enough, this price pushing lower is also easily seen here. We see a loss of momentum here in both MACD and RSI. So strong trending market. Recently, the trend has changed, and I don't see that big momentum any longer. Now, let's have a look at British pound against the US. No, let's move to a euro against the British pound. And sure enough, the story that we can see here on the chart is very much different. We still see that the market is going strong. We can still see that the euro is very strong against the British pound. We can still see this beautiful uptrend. We can still see the fanning pattern here in our moving averages, 10 period, very clearly and well defined above the 20, above the 50 and the 200. We continue to see a series of rising higher highs and higher lows. So what we're seeing in this market here is a much stronger setup. No, sorry, it's not a setup. We see a much better trending environment. And usually this is the kind of chart structure that I'm looking for when it comes to my trades. Now you might say, okay, I can see the euro is strong. I can see the British pound is weak. But now let's have a look at the third pair as well. Let's have a look at what the US dollar is doing against the British pound. Let's have a look at cable GBPUSD. And what we can see here is pretty much this market has been, the big picture has been moving sideways. Again, here, yes, it's an uptrend. We see the price is clearly making here new higher highs. But we can see also this series of rising higher lows. And please note that every time price has pulled back, where has it pulled back to? It has pulled back here into a moving average buy zone. And from there, it continues higher. But here again, also just recently, the trend has changed. We are starting to make new lower lows. We're making new lower highs if we compare those. And is this a market environment that I would intend to trade now in my own account? No, I wouldn't. Just compare the structure of what we're seeing here on that chart with what we're seeing here against the British pound. Let's get rid of the euro here for a moment. And let's just arrange those two charts to get a better overview. And just once again, which of those two charts looks cleaner to you? Which of those two charts is an environment where you would say, okay, I have a fair idea about what might be happening next? It's important to keep in mind, I'm really stressing this potential point here. I don't have a crystal ball. I don't know what's going to happen. I just get the feeling that in this kind of market here, it's rather likely that the market might be continuing in that direction. And I think it would take some more effort for this market to change direction. With cable, with British pound against the US dollar on the other hand, I feel that this market has been going pretty much sideways for quite some time. We tried to break beyond this range and we had a little trend here, but in the end it all came back, and honestly I don't have a clue what's going to happen here next. Currently a little bit more momentum to the downside. Is it enough for me to actually consider taking a position here? No, I don't think so. For that reason, for my personal trading, I would focus here on euro against the British pound. It's important to keep in mind that I'm a trend following trader, which means I want to see those trends because I think what is in motion tends to stay in motion. But that's just my approach to trading. If you are trading range-bound markets and you have your strategy and that strategy works for you, that's perfectly fine, that's perfectly viable. Just because that's not my game doesn't mean it's not working in general or that something is utterly wrong with it. It isn't. You have to find something that works for you. And so keep that in mind. If I prefer that chart because it gives me the context that I'm looking for and I despise this one, doesn't mean that one is bad to be traded. It's just not my style of trading. All right, so I hope you can see that although those markets are highly correlated, obviously we are looking at euro, at US dollar and British pound, and so those three crosses here that we see, we would expect to see some kind of similar behavior, but just looking at those three markets, we can see that one market clearly gives us a much cleaner chart structure than the other two. Now the idea might be, okay, how could this be potentially tradable here? And let's just jump back here to euro against the British pound, because that was the one with a clean chart structure. And let's look here also on the higher time frames. We are in an uptrend on the weekly chart. We are in an uptrend here on the monthly chart. We are definitely overextended here on the weekly chart. We are a wee bit overextended on the daily chart. Is this a market that I would be trading right now? No, I wouldn't, because I'm not getting the setup here that I'm looking for. I want to get a small bullish candle setting up here in my buy zone, and only then would I consider to take a trade, at least on the daily chart. Once we come down here with our time frames and start to look at what's going on here, the 15-minute chart, it's a sideways market here. It's not tradable for me. I don't have the proper context. I don't have the proper environment where I want to execute my strategies. Same is true for the hourly chart. Now, the 2-hour chart starts to look a little bit like it. The 4-hour chart, pretty much the same. And on the 8-hour chart, we start to see that there might be a potential correction going on here. Now, once again, I'm a trend following trader. I don't want to take this counter trend trade. If, however, you say your game is to just, if you think it's obvious what the market is doing here, we are overextended, we are forming a bearish candle right now, and once this bearish candle closes, you might think about probably or potentially trading this market here to the downside for a pullback. My take on that setup is I rather want to wait for this pullback to occur, for a sign that the trend, the original trend, continues, and only then I would be raising an order for me. But if you say, okay, market is coming down, I want to speculate on that pullback here on that 8-hour chart. Let's have a look at some Nadex contracts here and get a feeling for what could be potential setups or trades that you might consider here. Again, personally, I wouldn't place those trades. This is now really just for demonstrational purposes. Please, by all means, don't just follow my trades here. It's really just for educational purpose. So I don't expect those trades to be working. And guys, you see that demo account here started with 25,000 bucks. And I'm placing a lot of those trades here for those webinars just to illustrate how easy it is to open those positions and how certain approaches might be tradable. It's never a trade recommendation. Obviously, if that was my working account and it would be down, it wouldn't be that nice. So keep that in mind. It's really just for demonstrational purposes. We're looking here at forex binaries, and we're looking at euro against the British pound. And let's have a look here, for example, on the daily chart. Now, daily 3 p.m. Now, how much time is still left here for that trade to work out? Remember, with options, with binaries, with spreads, you always have to consider how much time is left in the life cycle of those options. And here, for the 3 p.m. one, we still have 2 hours and 42 minutes left. This means at that point in time, it's judgment time. Then those options will expire, and then our Nadex will have a look. Is the underlying market trading above, for example, 0.9120? You see where we're trading here right now. And only then, if we're trading above this strike price, then this contract will settle for $100. If the underlying market is trading below this level, then the contract will settle for $0. This is where the term binaries is coming from. It's either worth everything, which means 100, or nothing, which means 0. All right, 2 hours, 42 minutes. And let's have also a look here at the daily 7 p.m. Let's just click here. And you can see 6 hours, 41 minutes left. This gives us more time. This gives us more time for that trade to potentially work out in our favor. You have to pick your battle. If I was to trade the lower time frames, 5 minutes, 15 minutes, I would probably feel a little bit more comfortable going for shorter lived options with closer expiries. If I'm trading the higher time frames, I probably want to have more time for those trades to work out. Remember, one candle here represents 8 hours. So going here for a 6 hours and 41 minutes expiry cycle might already be pushing my luck a little bit, at least here. Now, the question is, if you speculate that we might get a pullback here, what could be a potential trade that you want to consider here? We have to balance 3 things when it comes to trading binaries or options in general. The first thing is, let's just have a look here, for example, at this one. We're looking here at the 0.9180 strike price. This is pretty much, that option is already out of the money right now, which means this contract, it's rather likely right now, at least from a mathematical point of view, that this could be a potentially profitable trade. What's the rough probability, at least from the mathematical statistical model? I just take the mid price of the bid and the offer and interpret that roughly, not precisely, roughly, as the probability that this contract will be in the money, or at least at the money at expiry. And the mid price right now would be around about 25, so 25% roundabout, that this trade is going to be a profitable, potentially profitable trade for me. Oh, sorry, 25% that this trade might be a potentially losing trade for me. The probability that the market will be above that strike price here is just 25%. That would be my losing scenario. So my winning scenario, the probability for that would be pretty much 75%. So let's have a look at, sounds awesome, doesn't it? 75% probability looks very nice, or sounds very nice. But there's a drawback, there's a downside. And the downside is, if that trade works out in my favor, my maximum profit is just, I can just keep what I just got now for selling that contract, which would be $20. However, if the market starts to rally and I have to settle this contract for 100, I have to settle for 100. I just got 20 bucks, so my maximum loss is 80. I'm risking $80 in that scenario for a potential profit of just $20. That's very, very bad. Usually, I want to be able to make at least $1 for every dollar that I've been risking. Remember, we want to have two components. We want to win more often than we lose, and we want to have a reward to risk ratio which is better than 1. We want to win bigger, and this is just not what I'm looking for. Again, your game might be different. That's what I'm looking for, and so to have a potentially profitable trade here, 75% probability is awesome. But the reward to risk ratio here is just too bad for me. So I won't be considering that one. Another one might be to say, okay, let's have a look at this one. Strike price 91.40. 91.40 would be around about here. So a little bit of wiggle room for price to come down. Price has to work in my favor. If I was to sell this contract here, the market is currently just seeing a probability of about 5%. That this could be a potentially profitable trade for me. The probability that I will probably be losing on that trade would be around about 95% right now. But just compare now the maximum loss to the maximum profit. This trade is now giving me a 9-to-1 reward to risk ratio. For the 10 bucks that I'm risking, I can potentially make $90. Every dollar at risk, $9 at potential profit. I'm paying for this dearly with a much reduced probability here. Now, if you think price is coming down within that time frame, you could be placing that order. Again, it's not a recommendation. I just entered that market. Usually, what might be a humble and modest thing to do would be to just have a look here at something which is priced around about 50. If it's trading at the money, this means the price should be pretty close to 50. So if we're looking here at this contract, for example, we can see here 64.75 to 74.50. So mid price roundabout would be now something like 70% probability that this was a potentially, or that this trade will be, that position will be, that contract will be in the money. And let's just have a look at this one here. Maximum profit 64, maximum loss 35. So not a 2-to-1, but definitely larger than 1-to-1. Usually, if you're going for that kind of reward to risk ratio and that kind of probability, it's just the mathematics, the statistics. Probably those trades might be working out more often for you than not. However, if they work out, the potential profit is not as large as with the other ones. And this is what I mean. You have to balance this stuff. You have to balance your reward to risk ratio that you're seeking with your trade, and the probability that this one might be working out. And of course, also with the time left. If you think that candle is not bearish enough, and sure enough on the shorter time frames, market might be still rallying, we can go to a shorter time frame, for example, and now just say, okay, why not have a look at that contract and think about buying that contract. We have now 2 hours and 35 more minutes left. And again, I'm just showing you this now to give you a different expiry cycle, to give you a different strike price, and to give you a different trade direction. It's not meant to be followed. It's just for educational purpose. The idea here is if I'm buying that contract right now with 2 hours, 35 minutes left, I'm paying now 25 bucks for this contract. What's the probability for this bullish position that this trade will work out? I'm just taking the mid price, which would be something around 22-23%. However, if it's working out, I have a 3-to-1 reward to risk ratio on that trade. I could be making potentially 75 bucks for a risk of 25. Just placing that here in order to have things a little bit balanced, and you see those two positions are now on, and it's so easy to place those trades here at Nadex. Just keep in mind you want to balance the probability that it could be a potentially profitable trade with the reward to risk ratio and how much time is left in that life cycle of that option in order to actually potentially hit your targets that you're looking for. All right, guys, we have about 5 more minutes left, and I want to use those 5 more minutes to have a look at some of the US index markets. I think those have shown us some nice action just recently. And sure enough, on the weekly chart, we can see price is still in an uptrend. Is it still an uptrend? I just picked my line here, and we can see, yes, it's still a higher low that we're forming here. And the weekly chart is now just giving us that not so small, but still quite small enough bullish candle. But keep in mind, that's the weekly candle. Today, it's just Tuesday. I will have to wait and until the end of Friday to actually be able to consider this to be a tradable candle here on the weekly chart. I always want my candles to be finished because I have seen so many times that candles change the structure completely within the last maybe 15 seconds of trading, and I'm always waiting for my candles to finish printing in order to use them as potential trigger candles. Monthly chart, we are still a wee bit overextended here. Not really terrible if you compare the overextension that we saw here for quite some time. That's okay for me. I could be living with that. And however, the daily chart, let's make that larger as well. Once again, we can see the price made a lower high. We also made a lower low here. And for that reason, the trend now has changed on the daily chart here for the S&P 500, for the E-mini futures, and the corresponding underlyings for the Nadex binaries and spreads. We can see the 10-period moving average has crossed below the 20, is now crossing below the 50 as well. I don't care so much about those crosses on their own. I just want to see my fanning pattern for a nice uptrend or downtrend, and I think it's rather more likely here to see that we will start to see a fanning pattern here for the downside on the S&P 500. And sure enough, we have convergence, which means when price made this new lower low, MACD made a new lower low, and RSI pretty much held its ground and just, yeah, pretty much the same level here. So here neither convergence nor divergence, but overall much more momentum here to the downside. And if we get a small bearish candle setting up here on the daily chart, that would be pushing it a little bit, but coming down to those other time frames, we might start to see something here, maybe on the 8-hour chart, maybe on the 4-hour chart, but the pullback here is already way too deep. We'll have to wait to see what happens there. Overall bias here for me, at least from the daily chart, would be more bearish than bullish. Let's also have a look at the Russell. And sure enough, the Russell 2000, the mid-sized, the small caps, clearly here on the daily chart is pushing lower. You can already start to see here the fanning pattern, 10 well below the 20, and now also the 50. You can clearly see the series of lower highs and lower lows. We have good convergence here on MACD, RSI going a little bit sideways there, but overall, very clear momentum to the downside. And let's zoom out here a little bit. And what we want to see is that price might be trying to test here some of our levels. And you see, sure enough, price bounced from this level here. And the idea is if we can identify a level here, like the one that we have here, this 1,392 roundabout, if we tend to get a small bearish candle sitting just below this level, that might be the typical kind of setup that I'm looking for and that I'm really excited about. Because if we manage to get this setup and manage that our potential stop loss location would be protected by this level, this would then just add further probability that this trade might be working out in my favor. I never have a guarantee. It's just I just want to gather many small bonuses. I want to gather many small probabilities that trades are working, that make it a little bit more likely that trades work out in my favor instead of not doing so. I will never know for sure, which is why I must be sure and consistent with my position sizing, my risk management. Another big advantage of trading here at Nadex, because you exactly know your downside upfront, and therefore it's very easy to apply proper risk management and position sizing. All right, guys, time's pretty much up already. So if there are no questions, I would be just jumping to the big and final slide, which is, of course, the big thank you for tuning in today and attending our webinar. I hope you have enjoyed the session. You learned something new. You were able to have a little glimpse, at least, at what's going on in my head. And yeah, any feedback that you have for us is really appreciated. We're running those sessions for you. So anything that we can use in order to give you more of the content that you want to see, just let us know and we'll do our very best to help you there. Helping you there, you can see here on that slide all the ways to be in touch with Nadex, both the phone numbers, email addresses. If you haven't done so, please consider signing up for the demo account to just get a feeling for how easy it is to trade those contracts and how powerful and easy proper risk management can be applied here on the Nadex platform. Yeah, I think that's pretty much it from my side. I mentioned the short survey. I think I did so. So once again, yeah, I don't see any questions. So once again, thank you very much for tuning in. And now to all of you, have a great day. Happy trading. Catch you next time. Thanks again. Take care and bye-bye.